Hi there, you're watching Market Cafe on ET Now with me, Shriyanti Singh and Priyanka Uppal. And over the next 1 hour, we get you news and updates from within the country as well as across the globe, tell you which stocks that you should also be keeping on your radar, and also tell you what the brokerage is saying bright and early this morning. But first things first, well, let's take a look at the US markets and see what the handover is like.
Absolutely. Morning, Shriyanti. Looks like that the Wall Street wants to extend the post-election rally, and the coupled with the Fed comments that has, spurred a fresh rally in US markets. In fact, we saw record levels again, intraday high for all three majors. If you talk about Nasdaq, S&P, and even for Dow. So let's just quickly tell you that what exactly happened. And since we know that US has been the best performing market for this year also, and now post that we have clarity after the elections. Now the Wall Street, all three majors, they hit intraday high on session on Thursday. Fed lowered interest rates by quarter point. That was in line with traders' expectation, and that's what cheered the market again. Now Powell, when he clearly said that he's feeling good about the economy during a press conference, that actually boosts the confidence of the traders more. S&P gained 0.7%. Tech-heavy Nasdaq, that one jumped 1.5%. Nasdaq has been the best performing index so far if you talk relatively comparing with the other global peers. And talking about clearly ended nearly 19,000. Nasdaq ended for the first time ever. And 30 stock Dow, that was little lower yesterday. But all three major indices had hit intraday high during their session yesterday. Major reason was, of course, the Trump coming back, and of course, Fed lowering the interest rate and talking and giving good comments about the economy, that he's feeling good about the economy. That's what actually spurred the rally. If you talk about the bond yield, they were trading with a little softness, 12 basis point lower at 4.32%, and this was post that the bond yield jumped over 14 basis point in the last session. In fact, the 2-year bond yield also fell by 7 basis point yesterday. So we've got a good set of cues from US market. Yields are lower, which is of course a favoring point for Indian banks. But then how did crude and oil and gold, that one fared out yesterday?
Well, absolutely. So when you take a look at oil prices, you're looking at a rise coming in as the markets did continue to weigh the consequences of a Trump presidency as well as the Federal Reserve's latest decision as well on interest rates. So those are the kind of factors that you're looking at least when it comes to oil. Brent crude futures in terms of levels rose just about 71 cents or just about 1% to close around that $75 per barrel level. And when you take a look at US WTI as well, similar moves coming in there as well, because 67 cent uptick coming in for US WTI, so 0.9% uptick coming in for that one. A close above that $72 per barrel level. So that is the kind of move that you saw coming in for US WTI as well. Now, in terms of the factors that we're keeping an eye on, of course, Donald Trump's election win initially did trigger a sell-off, and that is the kind of move that you saw coming in for oil prices, because that did push oil prices down more than $2 as the dollar rallied. So that was largely the picture and what it was looking like after Donald Trump's re-election. But crude prices later also pared losses to settle at a less than 1% decline by the end of Wednesday's session. Largely, that's what you saw coming in terms of what really happened. In terms of factors that we're keeping an eye on for crude prices, downside factors, you do have a strong dollar as well as sluggish demand. On the other side, when you take a look at upside pressures, you do have potentially increased sanctions on Iran and Venezuela under Trump, as well as a conflict in the Middle East. So that is likely to underpin oil prices as well. And those are the kind of factors that we have at hand, at least when it comes to oil prices. But let's also take a quick look at gold, because gold prices rose more than 1%. Those are the kind of moves that you saw coming in for gold as well, helped by a retreat in the US dollar as well as the Federal Reserve cutting interest rates by 0.25% point, as widely expected as well. So that is the kind of move that you saw coming in for gold as well, 1.2% uptick that we're looking at there as well.
All right, so crude price rose, spot gold was lower by 1%. These are the key of a few of the key economic indicators. But which are the events that one need to watch out for in terms of global earnings? Of course, the way Airbnb posted, they were trading lower yesterday, but the key comments to come from Sony as well as SoftBank in terms of global earnings. Back home on Nifty, we have two Nifty companies to report numbers today, SBI and Tata Motors. Tata Motors, we're again expecting a softness. This is what Street is expecting as the kind of, the slowdown we've seen in the auto demand environment. Let's see how this one pan out and what kind of numbers from JLR the company posts. On corporate action side, SBI as well as Equitas SFB board, they are to mull fundraising. So these stocks could be in action. And of course, let's not forget a lot of action from the primary market. Day 3 for Swiggy as well as for Acme Solar. We've seen a little soft subscription, what has come in from Swiggy so far. So let's see how this one pans out on the final day.
Well, absolutely. But let's take a look at the biggest cue coming in this morning. Then the Federal Reserve has cut interest rates by a quarter point, setting its benchmark range to 4.5% to 4.75%. This unanimous decision then marks the second consecutive cut as the Fed adopts a more cautious approach to policy, emphasizing job support alongside inflation control as well. Officials are now balancing the risks to employment and inflation, signaling a shift towards a more employment-focused outlook in their economic assessment. Now, this move follows a larger rate cut in September, highlighting the Fed's recalibrated strategy. Then, Chairman Jerome Powell also said during his briefing that the election will have no effect on their policy decisions in the near term. In fact, when asked whether he would resign if requested to by Trump, the Fed chair simply said no. Powell subsequently also told reporters that the president does not have the power to fire or demote him. So that's the word coming in from him. And in fact, let's also go across and listen in to what exactly he had to say, because he did have some important commentary coming in terms of risks to goals that remain roughly in balance then.
The FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a quarter percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. Recent indicators suggest that economic activity has continued to expand at a solid pace. The election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Interesting, because there was so much was being talked about Fed's political independence that can possibly go with Trump coming in, but he clearly mentioned that the elections would not have much of impact on the Fed policy. Moving on, in a more central bank action, the Bank of England has cut interest rates by 25 basis points. Now the borrowing cost is now at 4.75%, and this is a second rate cut by the bank in this year, but has come with a caution approach also. BOE has warned the latest budget may drive up inflation by half a point, prompting the central bank to cut rates at a slower pace.
Alright, then moving on, while the Fed chair may not be pricing in the impact of elections on policy yet, Double Line Capital CEO Jeffrey Gundlach warns interest rates could surge if Republicans gain control of the House, creating a governing trifecta with President-elect Trump. Gundlach predicts more government spending would lead to increased borrowing, pushing up bond yields, especially at the long end. In fact, he also believes that Trump's potential tax cuts and pro-stimulus stance could also further strain the US fiscal outlook, putting pressure then on rates as the Fed navigates this challenging environment.
Okay, with this US weekly jobless claim, that one edged up marginally last week higher, showing little shift in the labor market despite recent hurricanes and strikes. While productivity rose at a 2.2% rate in Q3, unit labor cost also jumped by 1.9%, fueling inflation worries. Now, economists warn that rising labor cost could hinder the Fed's goal of sustaining 2% inflation.
Well, then moving on, let's get you some more news and updates. President-elect Donald Trump has appointed Susie Wiles as his White House Chief of Staff, marking her as the first woman to hold the role. Wiles, a key player in Trump's election victory, will take on one of the administration's top positions as Trump prepares for a return to the White House on January 20th. Trump also praised Wiles as tough, smart and innovative, crediting her for her role in his 2016 and 2020 campaigns.
Okay, so former Treasury Secretary Stephen Mnuchin, he said that President-elect Donald Trump's agenda will focus on tax cuts, tariff and sanctions. Mnuchin, who served under Trump from 2017 to 2021, noted that tax cuts are central to Trump's plan and would likely pass if Republicans control Congress. He also highlighted Trump's intent to use tariffs, particularly with China, to push for fair trade. Mnuchin expects renewed sanctions on Iran as well as Russia, targeting oil sales, and hinted at Trump tackling deficit spending, though he himself will support from outside on an official route.
All right, and that's the word coming in from former US Treasury Secretary Stephen Mnuchin. But moving on, then, Russian President Putin congratulated Donald Trump on his election victory, commending him for his courage during an attempted assassination at a rally as well. Putin also praised Trump's remarks on mending US-Russia relations and addressing the Ukraine crisis, calling them noteworthy. And he also expressed openness to dialogue. He also added a note of caution, though saying he's uncertain about what will follow. In fact, he confirmed that Russia is ready for discussions if the Trump administration seeks to resume contact.
Germany has appointed George Kukis as new finance minister amid mounting pressure on Chancellor Olaf Scholz to call snap elections. A close advisor to Scholz, he replaces Christine Lindner, who was dismissed after the collapse of Scholz's coalition government. The dismissal marks the end of the alliance between Scholz's SPD and Lindner's FDP and the Greens. Scholz has proposed a confidence vote in January with a possible March election.
All right, then moving on, the biggest winner from Trump's win seems to be AI darling Nvidia, which rallied to a record high, making the chip maker the first company in history to surpass a stock market value of $3.6 trillion. Its shares were lifted by broad investor optimism about tax cuts as well as lower regulations. The chip maker, in fact, also surpassed Apple's record closing market cap, which it had hit in October. The stock is up 3 times just this year alone.
Okay, moving on, Australia Prime Minister Anthony Albanese has proposed that the government would legislate for a ban on social media for children under 16. Now, Sumita Kharir is joining in with more details on that. Sumita, over to you.
Right, this proposal has come reportedly from Australian Prime Minister Anthony Albanese. He has proposed that the government would legislate for a ban on social media for children under the age of 16 years. Now, the country is age trialling, or rather trialling an age verification system which will assist in blocking children from accessing social media platforms. And if this proposal is vetted and ratified, well, this registration could come into force as soon as the end of next year. Now, the country's Prime Minister has cited risks to physical and mental health of children from excessive social media usage, and in particular risks to girls from harmful depiction of body image, including that of misogynist content. Now, this policy, if implemented, it could achieve a major breakthrough, given that there are several other countries like the United States and France, for instance, which have turned up the heat on social media platforms. France last year proposed a ban on social media for those under 15 years, although users were able to avoid that ban with parental consent. The United States as well has for years required technology companies to seek parental consent to access the data of children under the age of 13 years. In fact, what makes Australia's policy far more stringent is the fact that there will be no exemptions for children who have parental consent, and it will be incumbent on social media platforms to demonstrate that they are taking reasonable steps to prevent access, and it will not be on parents or young people. But that said, Australia's largest advocacy groups for child rights have called the proposed ban too blunt an instrument which only delays exposure, so they have instead proposed for a balanced approach to this issue.
All right, thanks, Sumita, for that update coming in. So, social media ban is in the works when it comes to Australia. Moving on to some more news and updates, then it'll give Hurun India Philanthropy List 2024 is out, and Shiv Nadar, the founder of HCL Technologies, has retained the top position. He leads with a donation of 2,513 crores. In fact, Shiv Nadar has been shining bright on the top 3 years, and that's the kind of move that we've seen in terms of that list. He's been retaining that position. He was followed by Mukesh Ambani with a donation of 407 crores, as well as the Bajaj family with a donation of 352 crores. Now, the list features Kumar Mangalam Birla as well as Gautam Adani. And another interesting feature of the list is Zerodha's founder, Nikhil Kamath, who has become the youngest philanthropist to be featured in the list. With this, Rohini Nilekani has also earned the title of India's most generous woman.
Wow, impressive list, must say. Well, we stay for a short break here. When we come back, we get you the cues from Asian market. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's get you a look at the Asian markets then. And when you take a look at that screen, when you take a look at Japan's Nikkei first, that's the one that's holding on to that shade of green coming in. On your screens as well, 0.3% uptick coming in. For Nikkei as well, broad-based topics is the one that's rising about just about 0.1%. Hong Kong's Hang Seng as well. Let's take a look at that one as well, because that's also holding on to that shade of green on your screens. 0.9% uptick coming in for that one. Shanghai as well is in the green. Let's take a look at the exact levels. 0.5% uptick on your screens as well. When you take a look at Australia's ASX 200 as well, that's the one that is on pace for a third straight day of gains. 0.9% uptick coming in for ASX 200 as well. On the flip side though, when you take a look at South Korea's Kospi, you're looking at a downtick coming in on your screen. 0.6% downtick coming in for Kospi as well. So those are the kind of moves that you're seeing broadly coming in for the Asian markets. The strong handover that we've seen has definitely helped a lot when it comes to a lot of these markets, except Kospi. That's clutching onto that shade of red as we speak as well. Back home, of course, we shut shop around the 24,199 level. And currently, what is being penciled in is a good start. So let's really see how that pans out for us, because we do have a good handover coming in, at least from the US, Priyanka.
Correct. Let's see. Looks like yesterday the kind of put and call action shows that maybe we could be back to a consolidation phase. But then let's see, we are down by 13 points right now. If you're able to recover, but then let's get you what the entire action pack looks like going ahead. At 9:20, we speak to Gautam Trivedi from Nepean Capital to understand is this FI outflow yet to continue for some more time, or are we in an oversold zone? Which value or which sectors he finds value in? 9:30, keep it with earnings with ET now. We get to Sanjeev Kumar, who's the Director of Finance for RVNL. Post the numbers, first reaction. We speak to Anisha from Mahindra Group at 9:40. Mahindra has been one stellar stock amongst the entire auto pack. Numbers were good, and even brokerages have given bullish report. Let's see what are the plans looking like for SUV segment, and going ahead, we take it with Anisha. At 9:50, we have Sakant Prasad, who's a CFO for Vatak Wabag. At 10 a.m., we get you Pralay Mondal, MD and CEO for CSB Bank. And at 10:15, we speak to Puneet Chatwal, stellar number from Indian Hotels, MD and CEO for India Hotels, and we understand what is the growth outlook for the company ahead. And 10:30, we speak to Hiranand Savlani, who's the ED and CFO for Astral. Little soft number Astral has posted. So let's see. We'll keep it going with earnings. A lot of earnings to catch up, and of course, management outlook is that what we'll get the key comments for our viewers.
Right, and that's the power pack lineup that we have for you on the market. But time now to take a look at the news.
Welcome back. You're watching Market Cafe on ET now, and let's get you some more stories. In fact, industry chambers CII and FII have held their pre-budget consultations with Revenue Secretary, presenting before the ministry key demands related to Budget 2025. Now, budget which is set to be unveiled on February 1 next year. CII delegation that met Revenue Secretary yesterday, and the meet included CII President Sanjeev Puri, DG Chandrajit Banerjee, R. Mukundan, who's the MD and CEO for Tata Chemicals. Listen in to what Sanjeev Puri had to say on the key issues discussed at the meeting.
We discussed some important issues on how to continue to foster greater investment, greater amount of exports, greater amount of consumption, and building on some of the good policies that have already been taken in the past. We did reiterate the need to continue the focus on public capex, staying within the fiscal glide path. We did also speak about ideas on how inflation targeting could be done by keeping aside some of the sticky pieces of the food inflation. We discussed on factor reforms, we discussed on agriculture related issues, we discussed on exports related, and a lot of, operational issues were also discussed. And for people at the lower income bracket, we've suggested some relief on income tax. We've also suggested some improvement in the direct benefit transfer, PM Kisan, and things like that.
All right, and that's the word coming in from Sanjeev Puri about the key takeaways of that all-important meeting. Moving on then, and the end of the runway for Jet Airways as Supreme Court exercised its extraordinary constitutional powers and ordered the liquidation of grounded air carriers' assets yesterday. A Supreme Court bench led by CGI set aside the NCLAT decision, which upheld the resolution plan of Jet Airways and also approved the transfer of its ownership to Jalan Kalrock Consortium or JKC. It said the liquidation of the air carrier was in the interest of creditors, workers, as well as other stakeholders. Now, the bench also wrapped NCLAT for its decision. Remember, the NCLAT on March 12th upheld the resolution plan of the grounded air carrier and approved the transfer of its ownership to JKC. So that's the key takeaway coming in, more turbulence for Jet Airways. All right, then let's also get you the word coming in from aviation expert Captain Sanjay Karve to understand the impact of Supreme Court's liquidation order as well. Listen into what he then had to say about what's next for Jet Airways then.
The aircraft assets which are on ground have depreciated so badly that on paper, if they are valued at X, the actual value, what you may get is going to be X by 4 or X by 5. Even the 3 aircraft which was sold by Jet Airways to pay off their dues, they are still lying on the airport. The company which is supposed to pick up those aircraft has a huge outstanding amount to pay to Airports Authority of India. So there is no way, even after disposing of the airways or the airlines, that the creditors can recover their money. Yes, probably what they can do is they can sell the brand name of Jet Airways. The moot question is, would someone like to invest money with the name of Jet Airways? That is something which has to be seen. It is extremely essential that in a case like this, the government has to have a mechanism which does a speedy redressal. Either you revive it or you shut it down.
All right, so this one is a developing story. We'll get more updates as it comes. But moving on, the FII selling is still on, and the second half of October has seen outflows of whopping $3.3 billion so far. Energy sector has seen the highest outflows in H2, over $3 billion in last 6 months. Which sectors have seen the highest inflows and even outflows? How have the FIIs positioned themselves sectorally? Sharad joins in with the breakdown of all that. Sharad, interesting data. Please tell us.
Well, as the FI sales has increased, and as per the NSDL data over the last 2 weeks, over the month of October, if you look at it, the FI flow has been negative, coming in more than $3.3 billion of negative flows. Now, interestingly, this year only in the positive is only $848 billion worth of FI flows has come in, and calendar 24 I'm talking about, and over the last 2 weeks, only 4 sectors have actually been in the green when it comes to the positive flows from the FIs. Over the last 6 months, the energy sector, that has seen a very strong outflows of almost $3.27 billion. And let's look at the sectors which are having the highest inflows over this last the fortnight. Over here, commercial and professional services, that's a $296 million worth of inflows, followed by the healthcare segment, that is almost $276 million coming in with the terms of inflows. Also utilities, that's almost $159 million. But now let's look at the majority of the numbers, especially in the outflow segment. And of course, energy segment is almost $1 billion, you could say, outflows going out. Capital goods and FMCG and consumer services, it's ranging between $503 to $567 million. Now let's look at how the positioning is there of the FIs in the most of the important segments where the flows have been very active. For healthcare and financials, there is overweight still, and of course, if you look at the financials this month itself, the entire October, if you take it, more than $3 billion of outflows have been there. But also the underweight segments, that is something to look out for over there: energy, software services and materials. All these three segments, FI positioning is underweight.
Sharath, for that update coming in. In fact, let's move on and get you some more news and updates. Sources tell ED now that the Enforcement Directorate has conducted search operations at offices linked to e-commerce giants Amazon as well as Flipkart. In fact, Sameer Dixit filed this report earlier. Take a look.
So the investigating agency, Enforcement Directorate, has now officially confirmed to the news that we have played through the sources. ED has said that they are conducting famous searches at 19 locations located at Panchkula, Mumbai, Delhi, Hyderabad, Bengaluru, and these searches have been conducted at the main vendors of Amazon and Flipkart. So there's sort of a action against Amazon and Flipkart, and the reason is that in the recent past, the investigating agency has been receiving several complaints against Amazon and Flipkart, which are the e-commerce entities and which provide marketplace for the vendors. And they received complaints that they are directly or indirectly, they are influencing the sale price of the goods and services. Not just this, the allegations have been raised that they are not providing the level playing field to other vendors. So based on these allegations and complaint, now the searches under FEMA has been conducted at 19 locations at the main vendors of Amazon and Flipkart. And lately we can see that what all sort of document or other seizures that has been made by ED, but that's a big action that has been done by the investigating agency, and this action has been welcomed by the Traders Association, CAIT. They have said that the move by ED is in the right direction, and they have also said that in the recent past, CCI, the Competition Commission of India, has also sent the notices, the penalty against Amazon and Flipkart. So they have welcomed the move by ED, and they have said that this is a move in the right direction. But yes, more trouble is likely to come in for the e-commerce players in coming days.
More trouble to come in for, likely to come in for e-commerce players. And Sameer was talking about Praveen Khandelwal, who represents CAT, the National Secretary General for CAT on ED crackdown. We spoke to him and to understand that how e-commerce deep discounting policy and sustaining despite incurring losses. Let's listen in what exactly he said.
These e-commerce companies are undertaking predatory pricing, deep discounting, loss funding. Even then, the physical retail has registered a sale of around 4.25 lakh crores of rupees in just concluded festival season. And now we are ready to welcome these sales. And for wedding season, which we projected a sale of around 6 lakh crores of rupees. But at the same time, there is a big need to investigate as to how these e-commerce companies are surviving in spite of sustaining losses.
All right, then moving on, let's get you some earnings updates. Then banking major SBI is all set to release its second quarter earnings. And when you take a look at the expectations, NII as well as profit after tax are expected to grow at least on a year-on-year basis. In fact, Gaurav is standing by to tell us what really the street then is penciling in. Gaurav?
India's largest bank, SBI, is all set to come up with their second quarter's numbers. And when it comes to investors, they are expecting some kind of strong set of numbers from SBI, because when it comes to loans, they are expecting the loan book to grow at around 14 to 15%, which is higher than the overall industry. And that is the reason why we may see net interest income increasing almost by 5% on a year-on-year basis. Apart from that, when we talk about net interest margins, we may see a little bit of moderations. Net interest margins may go down a little, almost by 500 basis points. And the reason being that a partial impact will be seen because of the penal interest charges, and at the same time we may see some normalization also happening. Other than that, when we talk about cost to income ratio, we are expecting to see some kind of moderation there, and that is the reason why PPOP may grow around 25% on a year-on-year basis. And lastly, when we talk about profitability, there also we may see some kind of growth of around 9%. When we talk about provisions, now analysts are not expecting any kind of negative surprise from SBI. In terms of slippages, we may see the number a little bit higher because of the exposure to MTNL and at the same time RINL. In fact, when we talk about the updates that have come from SBI, they have already downgraded MTNL's exposure of around 3,200 crore rupees to NPA substandard. So slippages is something that we will be watching out for. But overall, when it comes to asset quality, we are not expecting any kind of downgrade momentum coming up in asset quality. Lastly, when we talk about deposits growth, we may see a little bit of softness, but when it comes to CD ratio, SBI is still sitting at a healthy level, and that is the reason that might not be a constraint for loan growth going ahead. Lastly, any kind of commentary on the asset quality is going to be something that we will be watching out for, and any kind of commentary on the management when it comes to ROA is something that will be key to watch out for in SBI. But all in all, a strong set of number is what we are expecting from SBI.
All right, strong set of numbers expected from SBI. Largely, all the banks have reported good asset quality. Let's see how this one comes out, the largest public sector bank. But now it's time to even talk about Tata Motors number. Auto giant Tata Motors is all set to report its Q2 earnings. Let's go across to Srishti to understand what Street is penciling. Srishti, when it's time to talk about Tata Motors number, this indicates the last leg of earnings also. What to expect from this giant?
Well, this time from Tata Motors, we are expecting a decent set, but indeed the margin figure on a consolidated basis, and especially the JLR EBIT margin figure will be the key monitorable, because all in all what we have seen is that the India business didn't perform that well, because there has been a decline in the volumes for their passenger vehicle as well as their commercial vehicle segment. When it comes to the JLR volumes, that is expected to see a low single-digit decline on a YOY basis due to the supply challenges. But the silver lining in the JLR volumes is that the contribution from some of their higher ends models is being significant. That could actually support the number for JLR division. If we talk about the JLR EBIT margin, that is expected at 8.2%, but sequentially too there will be a decline of 70 basis points if these numbers come in at as per our expectations, but that will be primarily due to the low volumes and the rising discounts. If we talk about the India business, then India commercial vehicle EBITDA margin also expected to see a decline, and 10.8% is what we are expecting, while the passenger vehicle segment, that too saw a bit of a pressure in their volume figure. Margin number expected at 5%, declining from 5.8% what the company witnessed in Q1 of FY25. But let's also take you through the consolidated number expectation. Revenue is expected at 1,05,056 crores. EBITDA is expected at 14,474 crores, while the consolidated margin figure, do watch out for 13.8% is the number what we are expecting. And lastly, on the profit figure, 5,038 crores is the number that we are expecting. But indeed, on the management commentary side, the key monitorable will be the outlook on the various segments of Tata Motors, be it JLR or the India or the commercial vehicle business. How is the company foreseeing the volume growth outlook? That will be the key to watch out for.
Well, absolutely. Outlook is definitely going to be key to watch out for. Thanks, Srishti, for that update coming in. We'll keep an eye on Tata Motors. But time now to take a very quick breather on the show. When we come back, we'll get you the list of stocks that you should be keeping on your radar bright and early this morning. So don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates then. Quick commerce giant Swiggy's IPO is open for subscription, and as of day 2, it has been subscribed 0.35 times. Now remember that via this IPO, Swiggy plans to raise around 11,300 crore, and when you take a look at the price band for the issue, that is set at 371 to 390 rupees per share as well. What are the brokerages then suggesting? Snehi standing by with a roundup of day 2 subscription figures, as well as the suggestions coming in from brokerages as well.
Well, yes, so today is the third and the last day to subscribe to the Swiggy IPO if you wish to do so. But here's also the run-up of what the subscription status looks like at the end of day 2, which was yesterday, 5 p.m. Now, if you take a look at the QIB portion, that has been subscribed 0.28 times. You have non-institutional investors, which is NIIs, at 0.14 times. Retail individual investors, RIIs, have subscribed to this IPO 0.84 times. employees. That's the only portion of this IPO that has been oversubscribed so far. 1.15 times subscription coming in from Swiggy's employees. That makes the total subscription around 0.35 times, which means only 35% of the IPO has been subscribed to by the end of day 2. And just to run you through what this IPO is all about, what the IPO looks like, it's been a lukewarm response over the last 2 days. The IPO size is 11,327 crore rupees, out of which the fresh issue is 4,499 crores. The offer for sales component is 6,828.43 crores. The lot size is 38 shares in one lot, and the price band is set between 371 and 390 rupees per share. Which makes the minimum retail investment 14,820 rupees per lot. Now also keep in mind that a discount of 25 rupees per equity share is being offered to eligible employees bidding under the employee reservation portion, and 13th November is when we are tentatively expecting this IPO to list on D Street. Now here's the brokerage roundup, what brokerages are making of this IPO so far. Subscribe for long term is the call coming in from Motilal Oswal as well as SBI Securities and INSEC. A subscribe call is coming in from BP Wealth as well as Geojit. However, an avoid call on the IPO is coming in from Aditya Birla Money. So that's an IPO, that's a brokerage note to watch out for. But well, yes, today is the third and the last day, and the IPO has been subscribed 35% at the end of day 2.
So the Swiggy, the much talked about IPO, but gets a lukewarm response so far. Let's see how the third day pans out. Thanks very much, Snehi, for all that breakup on the Swiggy IPO details. But Ansh is joining us now to give us an idea about the FNO snapshot. Looks like FIs are still bearish. Their long positioning has not been changing much. Ansh will join in a bit though, but then let's get you some more news in the meantime. Last day of the first assembly session of Jammu and Kashmir in 6 years after 4 days are washed out. Will logjam continue even on the final day? BJP set to protest again NC's Article 370 resolution, even as CM Umar Abdullah says centre will be forced to come on the talking table. The Supreme Court is scheduled to pronounce its verdict today on vexed legal question whether the Aligarh Muslim University enjoyed a minority status under Article 370 of the Constitution. A 7-judge constitution bench headed by CJI D.Y. Chandrachud will pronounce the verdict. It is to be noted that today is CJI D.Y. Chandrachud's last working day in office.
Last working day in office and an important judgment coming in. But moving on, Swimming Federation of India has decided to investigate the sexual harassment charges against one of India's most decorated swimmers, Virdhaval Khare. Victim also claimed that Virdhaval Khare sent him obscene pictures. Moving on then, let's get you some more news and updates. 4-day-long Chhath Puja comes to an end today, with devotees thronging the ghats of Yamuna, while a layer of toxic froth also continues to cover the holy river. Meanwhile, the Delhi government has heightened penalties for stubble burning to address pollution, which worsens with winter.
All right, with this, it's a wrap on Market Cafe. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.